It includes all different types of indirect taxes, and now it is called by one name, that is called GST, that is Goods and Services Tax. Tax will be levied, the tax will be imposed on what? On supply of goods and services. If any business entities whose total turnover is less than 1.5 crore in the financial year or 75 lakhs for northeastern states, so they will be eligible for this composition scheme. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to this new session on unit number 6, that is Goods and Services Tax, which is there for 6th Sem B.B.A students who are studying under University of Mysuru. Dear students, in this session we will be learning about what is GST and advantages of GST and types of GST and what is aggregate turnover and the different terminologies what we have under GST. So let us move on to the topic, the meaning of goods and services tax. Goods and services tax, that is the GST is also known as the goods and services tax. So one of India's many indirect taxes, it has supplanted a variety of other such as excise duty, VAT and service tax, etc. So earlier we had n number of different types of indirect taxes like the excise duty, VAT, service tax and other taxes, okay, like CST, central sales tax, and also luxury tax, service tax. We had different types of indirect taxes, but altogether what we call it now? Now we call it as GST. So it includes all different types of indirect taxes, and now it is called by one name, that is called GST, that is Goods and Services Tax. The Goods and Services Tax Act was passed by the Parliament on March 29, 2017, and it went into effect on July 1st, 2017, making it the most recent piece of legislation to be passed in the country. Yes, the act was passed on March 29th, 2017, on March 29, 2017, and it came into force from July 1st, 2017. Yes, from July 1st, 2017, on all kinds of goods and services, we are paying GST, not any other taxes, any other indirect taxes except excise duty and customs duty. Excise duty we are paying on petroleum products as well as on alcohol. GST is not applicable on petroleum products as well as on alcoholic products. Except those products, it is applicable on almost all the goods and services. So we started paying the tax, that is GST, from 1st July 2017. So moving further, again, goods and services tax, in other words, it is levied on the supply of goods and services. Yes, the GST, goods and service tax, is levied on supply of goods and services. So the tax will be levied, the tax will be imposed on what? On supply of goods and services. So if you are supplying any goods, you are supposed to impose, GST on that particular supply of goods or the supply of services. For example, you are a buyer, okay, you are a buyer and you also have the seller. So seller will be selling the product, you will be selling the product and the buyer will be paying the price. Right, the seller will be selling the product and the buyer will be paying the price for the product's purchasing. This price is also inclusive of tax. So who is collecting the tax here? The seller is collecting the tax. So at the time of selling the product, it is the responsibility of the seller to collect the GST on the goods or whatever the services sold by that particular seller. Next, moving further, goods and services tax law in India is a comprehensive multi-stage destination based tax that is levied on every value addition, and GST is a single domestic indirect tax law for the entire country. Yes, it is very comprehensive and multi-stage, and also it is called destination based tax. So what is this destination based tax? Destination based tax is all about the tax will be collected. The tax will be collected from the person who use the product, who use the services. So the person who use the product and the person who purchases the services or who use the services, that person is supposed to pay the tax to the government. So that is why GST is called a destination based tax. So in all over India, we follow the one indirect tax system, that is GST, and it is a comprehensive, multi-stage and destination based tax. And the kinds of GST. So mainly we have 4 types of GST. In that 4 types, the first one is CGST. CGST is all about Central Goods and Service Tax. CGST is nothing but Central Goods and Service Tax. Second one, SGST. So what is this SGST? SGST is all about State Goods and Service Tax. State Goods and Service Tax. Next one, IGST. What is this IGST? Integrated Goods and Service Tax. IGST is nothing but Integrated Goods and Service Tax. Next one, UTGST, that is Union Territory Goods and Services Tax. See, the first 2 items, that is CGST and SGST, will be applicable on intrastate supply. On intrastate supply. What is this intrastate? Intrastate is nothing but within the state. Intrastate is nothing but within the state. So if any goods are sold within the state, like the goods is sold from Mysuru to Bangalore, so for those kind of transaction, CGST and SGST is applicable. On what IGST is applicable? IGST is applicable on interstate supply. That means the transaction between 2 states. If the transaction is happening between Kerala and Karnataka, then IGST is applicable. If any union territory is transporting the goods, is selling the goods, then UTGST is applicable. So mainly we have 4 types of GST, that is CGST, SGST, IGST and UGST. So if you are selling the goods within the state, CGST and SGST is applicable. If you are selling the goods between 2 states, then IGST is applicable. If the union territories are selling the goods, then UTGST and the CGST is applicable. So moving further, objectives of GST. So what are the objectives of GST? Why they introduced the concept of GST? In order to realize the ideology of one nation, one tax. Yes, earlier we had different taxes, different types of indirect taxes. So with the intention of making it one nation, one tax, they introduced GST. So that is one of the main objective of GST. Second one, in order to consolidate a large proportion of India's indirect taxes. Yes, earlier we had different types of indirect taxes, like more than 12 to 13 or 14 types of indirect taxes we had. But now we have only one concept called GST. So in order to consolidate all the different indirect taxes into one form of indirect taxes, they introduced GST, and it is also one of the main objective for introducing the GST. Next one, in order to prevent the cascading effect of taxes. Yes, earlier they used to put tax on tax. Earlier they used to put tax on tax. That is called cascading effect. To avoid cascading effect, they introduced GST, and it is also one of the objective. Next one, to put a stop to tax evasion. Tax evasion is nothing but avoiding the tax. Okay, by showing misappropriate statement, by providing fake documents, fake invoices, they used to avoid tax. But now, after introducing the GST, it is not so easy to escape from tax. They can't escape from tax. So it is also one of the objective, that is to put a stop to tax evasion. Next one, in order to broaden the base of taxpayers. Yes, earlier they used to escape from paying the tax. But now after introducing the GST, most of them, all the business entities, business people, they comes under the GST purview, and they were supposed to register under the GST purview. Next one, procedures for conducting business online for the convenience of the customers. Yes, procedures for conducting business online for the convenience of the customer. To make convenience for the customers, the GST is introduced. Next, improved distribution and logistical infrastructure. Yes, earlier there was many confusions in distribution and logistical works, but after introducing the GST, it is very easy and there is no confusions, and there is a smooth running of distribution and logistical activities with respect to our business. Next one, the goal is to promote competitive pricing while also increase consumption. Yes, earlier the taxes, they used to impose different taxes on one product, but now they will be imposing the one tax, that is GST, so that the price will also be very less and the consumption also will be increasing because of the changes in the price of the commodity. If the product is available in less price, the people used to purchase more and more. Instead of purchasing 1 kilo, what they'll do, they purchase 2 kilos because the price is decreased. So with that intention, they introduce the GST. So these are all the objectives of GST. So why GST is introduced? Because of these very reasons, GST is introduced in India. Key features of GST. So what are the features of GST? The first feature is single indirect tax. Yes, GST is a single indirect tax where all different types of indirect taxes merged together and called by the name GST. So GST is single unified tax reform. It consolidated numerous existing indirect taxes and state taxes such as the central value added tax, special additional duty of customs, service tax and VAT. Yes, it comprises of different indirect taxes such as central value added tax, special additional duty and state taxes, service tax and VAT. The abolition of these indirect taxes has made many goods and services more inexpensive compared to consumers, well as made tax compliance easier for the businesses. Yes, after this introducing GST, the products are available in the lesser price and collecting of tax will be very easy to the business entities. Next one, input tax credit system. Input tax credit system is nothing but the manufacturer is supposed to purchase some raw materials in order to produce a final product, and the manufacturer will be paying tax on purchasing of raw materials. So these raw materials are called what? Input. The raw materials are called what? Input. So on raw materials, on inputs, the manufacturer will be paying the tax. But at the time of selling the product, what the manufacturer will do? The manufacturer will be taking the credit, that is whatever the tax paid on the input products or the input materials, he used to take the credit of those taxes. So that is called input tax credit system. So after introducing the GST, so input tax credit system is a very popular GST feature in India. A manufacturer or a service provider can deduct input tax paid on the purchases from their total output tax. The claim to the tax credit, the input and output invoice must match. This removes the traditional tax on tax effect. It also reduces the tax evasion. Yes, here the business entity or the manufacturer will be claiming for input tax at the time of paying the output tax, and whatever the documents required, there should be matched each other in order to claim the input tax credit, so that it will be very easy to the manufacturer. And this input credit system, input tax credit system, will help the manufacturer to claim the input tax, whatever the input tax paid by him, and it also avoid the tax on particular products. Next one, GST composition scheme. Yes, GST composition scheme, it's all about the scheme introduced for small business entities. If any person is running a small business entities whose total sales, total turnover less than 1.5 crore in a financial year or 75 lakh for northeastern states. If any business entities whose total turnover is less than 1.5 crore in the financial year or 75 lakhs for northeastern states, so they will be eligible for this composition scheme. So under this scheme, they will be imposing 1%, 5% or 6% of GST. So based on what kind of business they are doing, they will be imposing 1%, 5% or 6% of GST, so that the taxpayer, the small business entities, will be paying very less tax to the government. Next, four-tier tax structure. So what is this four-tier tax structure? In India, we have only four rates, that is 5%, 12%, 18% and 28%. So mainly we have four slabs under GST. Which are those 4 slabs? 5%, 12%, 18%, 28%. So no more other rates, no more other tax rates. Only we have 4 rates. So within these 4 rates, they are supposed to impose the duty on any particular goods or the services. So that is why it is called 4-tier tax structure. Next one, the benefits of GST. So what are the benefits of GST we have? So in that, the first benefit is the GST regime in India will be built on the solid IT infrastructure. Yes, GST is purely about going online. So everything will be online. So you can submit your claims through online. You can submit your returns through online. You can claim your input tax through online. You can submit your all kinds of returns online, and the registration procedure, it's fully online. So it is all about built on a solid IT infrastructure. That is the first main thing, because it avoids middlemen. It avoids middlemen. So everything will be online, and you need not to request anyone to do the work for you. Next one, online services for taxpayers include registration, returns and payments. Yes, everything will be online. So the taxpayers will be doing everything through online, like for registration, for filing returns and for making the payments. Next one, a simple and clear way to comply. Yes, it is very easy. Need not to worry about anything. They need not to take any application from the office, GST office, nothing. Everything will be online, and it is very simpler form. GST would ensure uniform indirect tax rates and structures across Canada. Yes, it's all about GST would ensure the uniform indirect tax rates and ensures the structures across the country. So here, yes, here it is one form of indirect tax, and the rates are also given accordingly. Like we have only 4 types of GSTs, that is CGST, SGST and IGST and also UTGST. And if it comes to slabs, we have only 4 slabs, that is 5%, 12%, 18% and 28%. Next, it would boost business certainty and ease. In other words, a GST would make doing business in the country tax neutral regardless of location. So yes, it boosts our business certainty, because in GST we have very uniform and systematic way of the tax system. So where there will be no confusions and the people will not get confused about anything. The business entities will be following the each and every steps whatever prescribed by the GST authority. A continuous flow of tax credits across the value chain and across state lines would ensure minimum tax cascading. Yes, the cascading effect will be very less. Cascading effect is nothing but tax on tax. So once the tax is paid, once you receive the invoice, you can show the same invoice all over the country. You need not to pay tax again on the same product. Next, this would cut business cost. Yes, it's going to reduce the cost of business. If cost of business decreases, then obviously the profit of the business entity will increase. Next, GST replaces multiple central or state indirect taxes. Yes, it replaces the different types of indirect taxes what we have in state and central. Next, there would be simply one tax form maker to consumer, leading to tax clarity. Yes, the people will get to know what kind of tax we are paying. Earlier we had different taxes and people will be in confusion what kind of tax we are paying. But after introducing the GST, we have only one tax system, that is GST. So under that we have only 4 types of taxes, that is CGST, SGST, IGST and UTGST, and people will be very clear that what kind of tax they are paying. So these are all the advantages or the benefits of GST. Next thing, aggregate turnover. So what is this aggregate turnover? Aggregate turnover means the aggregate value of all taxable supplies excluding the value of inward supply on which tax is payable by a person on reverse charge basis. Exempted supplies, exports of goods or services or both, and interstate supplies of person having the same permanent account number to be computed on all India basis but excludes central tax, state tax, union territory tax and integrated tax and cess. So aggregate turnover is nothing but, in a simple sense, in a simple manner, it's all about the total sales for a particular duration. okay, for 1 year. So what is the total sales happened for 1 year? That is called the aggregate turnover, and the total sales will not include the purchases. If you are purchasing anything into your business, that you are not supposed to consider. If you are selling the products, then that comes under aggregate turnover. And if you are paying any CGST, SGST, IGST and UTGST, that will also not comes under this aggregate turnover. So aggregate turnover is nothing but the total sales happened for a particular duration, that is for 1 year, and it will not include any purchases as well as any taxes paid. And if you are transferring the goods from one branch to another branch, that will also not comes under aggregate turnover. The only we consider the total sales, the sales or the goods supplied from the business, that is called aggregate turnover. Next one, input. So what is this input? So under GST law, input means any goods other than capital goods used or intended to be used by supplier in the course or furtherance of business. So yes, input is nothing but any materials used in the course or furtherance of the business. For example, you are a manufacturer, and to manufacture a product, you require some raw materials. What you will do? You purchase raw materials from other supplier, right? You are going to purchase raw materials from other supplier. So whatever the raw materials you are purchasing, equipments you are purchasing from other supplier to manufacture the final product. So those materials are called, those raw materials or the equipments are called inputs. So that is the meaning of input. Next one, input service. So under the GST regime, input service means any service used or intended to be used by a supplier in the course or furtherance of the business. Yes, input service is nothing but any service which are supposed to be used or intended to be used for the furtherance of the business, that is called input service. For example, cable provider, he will take the service from another head office or from the another cable provider, the service provider, and he will be giving that service to the customers. So whatever the amount he is paying or whatever the service he is receiving from another cable operator, that is called input service. Next, moving, inward supply. So what is this inward supply? Inward supply in relation to a person shall mean receipt of goods and or services, whether by purchase, acquisition or other means, and whether or not for any consideration. In simple word, any type of purchases are called inward supply. So what is this inward supply? Inward, coming into the business. If you are purchasing anything for the purpose of business, then that is called inward supply. You are purchasing some raw materials, that is called inward supply. Purchasing of input, that is inward supply. So anything purchased into the business with or without consideration, anything purchased into the business with or without consideration, that will be called as inward supply. Next, what is this outward supply? So outward supply is nothing but the supply going out of the business, that is, in a simple sense we can say sales. If you are selling any product or goods or services, that is called outward supply. So outward supply in relation to the person shall mean supply of goods and or services, whether by sale, transfer, barter, exchange, license, rental, lease or disposal made or agreed to make by such person in the course or furtherance of business. In simple word, any type of sales are called outward supply. Yes, any type of sales are called outward supply. Just you have to keep in mind that any sales is happening, that is called outward supply. Any purchase is happening is nothing but inward supply. So in today's class, we discussed about what is GST and the rates of GST, types of GST, benefits and features of GST, and we also discussed what is input service, aggregate turnover and inward supply, outward supply. So I hope all of you understood the today's topic. We will meet in the upcoming sessions. Until then, thank you all.